Good afternoon, everyone. I'm Li Xing Gan, Financial Market Strategist Consultant to Exness, and this is your market outlook for the 27th of February 2025. So for today, we will take a look at technical analysis on gold, just to follow up from where we left off previously, and also potential scenarios and key levels. Right, so let's take a look at gold on the higher time frames first. Right, so if we take a look at gold on the weekly, you can see that prices are still holding within that ascending channel, which has been marked out previously. It also formed higher swings, right? So in form of higher lows and higher highs. But what is notable here is that prices have paired recent gains. We're seeing that retreat below the ascending channel's upper bound. So this area here, right? So if I were to zoom in slightly, you can see that this level also aligns with the 78.6 Fibonacci extension. So the 78.6 Fibonacci extension is obtained from this zigzag pattern here, basically using the turning points of the zigzag pattern, right? And you can see that the 78.6% Fibonacci extension actually aligns with the upper bound of the ascending channel, which is also at about the 2950 zone. So this area, it's worth watching, and we're also seeing that retreat slightly below that channel's upper bound, as I've mentioned earlier. Right, on the daily time frame, if you move to the daily, you can see that other key levels that we can consider would be this area. Right, so on the daily, you can see that for me, this would be the first support level, the first demand zone over here, because of how we saw price reacted previously. So you can see that price, we saw a consolidation around that area before it pushed higher, and following that, price threw back, right? So we saw a throwback to the demand zone, and then it moved higher, pushed and challenged at all-time high again, created a new all-time high, which also aligns with the 78.6 Fibonacci extension. So right now, prices are pushing towards the 2880 demand zone, this area over here. If we move down to the 4 hours time frame, right, actually before we go to the 4 hours time frame, you can see that the next demand area, if this 2880 demand zone breaks, we could see price push lower, and the next demand zone for me would be at about the 2820 level, which is this zone. You can see that it was a previous resistance that price tested once over here before we saw the slight push to the downside, and then we saw a hesitation of this zone again before price closes above it, retested again as a support, right, and it continues higher. So these are the two support zones for me. If you take a look at it on the 4 hours time frame, so from where we left off in our previous video, right, we have highlighted these key levels. So you can see that what's notable with this is that price broke out of this ascending channel. So this ascending channel over here, we saw a test of this zone, which was highlighted as the previous potential demand, right? If price holds above this level, we could see a retest of this high, right? You can see that price did consolidate around this region over here before breaking to the downside. So what happens after is that when price breaks and closes below this demand zone, it becomes a potential resistance. So we saw a test of this zone multiple times before it continues lower. Right, so at least on the 4 hours time frame, let me just remove this ascending channel since it has been broken. So you can see that at least on the 4 hours time frame, where we are right now is that price is approaching the 2880 demand zone, right? It's also a daily demand zone. We could see potential for further consolidation around this zone, right? This area over here. But at the same time, if prices are going to be forming lower swings, right now, not so much, right? We're just seeing that consolidation. I want to see a clear break and close below this, and ideally price to form something like that, right? So if price continues the lower move, right? So bearish market structure in forms of lower lows and lower highs, and also break below this 2880 support, then we could see potential for a steeper decline towards the next daily demand zone that I've highlighted earlier, right, about 2820 level. So this is where we are right now, right? But at the same time, if we do see a rebound above this zone, and if price recovers above the 2920 resistance over here, right, we could see a retest of its all-time high. Also the resistance at about the 2950 region, this area over here. And if price breaks beyond that, right, then next potential resistance we could see a push to, right, would be about the 2980 level. So this zone, which also aligns with the 127.2% Fibonacci extension that was taken from this zigzag pattern here. Right, so that's a goal for me, right? On the 4 hours time frame at least, right, we're seeing a push to the potential demand. But if we were to see any kind of reversal, I want it to be accompanied ideally by a change in market structure on the lower time frames, right? So it can be with higher lows, higher highs, and this would suggest that we could see potential for that consolidation or a slight rebound, right, to challenge this 2920 resistance. Okay, so for me, at least on gold right now, I think price would consolidate within this zone, right, and we're just waiting for a breakout either of this demand zone, or if price does rebound above this, we want to see a shift in market structure on the lower time frame to suggest that it has a potential to move higher. So that's on gold. Right, the next one that I would like to take a look at would be on dollar index. So let's take a look at dollar index. Right, so you can see on dollar index again the key levels that we've highlighted previously. Right, so first on the higher time frames first, you can see that this area on dollar index, right, price did break reverse or retreated below this consolidation. If you extend this region, it was also an area that has been tested as a support and resistance level, right? So if I were to move just slightly to the left, okay, there we go. So this area over here, you can see that we saw that consolidation, right? Price as a resistance, tested as a support, and then failed below it. And then following a failure below this zone, it then pushed back into it, retested as a resistance before a further drop. So right now, if you take a look at it in terms of where we are, you can see that prices are on that daily resistance, this region over here. Right, so it's on the daily resistance. It's also aligned with that 61.8 Fibonacci extension. In fact, price just missed it slightly right before the whole move to the downside. It's also notable because it broke the ascending channel. Right, let me just refresh this so that we're able to get the levels more clearly. Okay, so this should work better. Okay, there we go. Right, so over here you can see that price broke below the ascending channel's lower bound, right, and this was the support level that we've highlighted earlier as well, 107.50. You can see this support level was the one that price broke below, right? So once price broke below this, it became a resistance zone and it pushed lower into the demand zone, right, on this extreme move. You can see that this was another demand zone, 106.20 level. We're seeing a consolidation around this zone right now. But in terms of market structure shift, right, at least on the daily, or even if we're to move down to 4 hours, right, then still no signs of reversal. Right, so you can see on the 4 hours time frame, every push that we have, right, to the downside, over here, you can see that when price broke below this demand zone, right, also partly triggered by a shift in expectations for the Fed policies, right, especially after weaker US data, right? So this area, you can see that once price broke below that demand zone, it retreated again as a resistance and formed lower swings, and now we're just seeing the consolidation around the zone, right? But at the same time, we're not seeing any clear market structure shift, right? We have this range, but we've yet to see price forming higher lows and higher highs to suggest that it could retrace further. Right, so for me at least, at this point, right, prices are holding on to a potential demand, but if we're to see any form of reversal, I would like to first take a look at the 4 hours or even the 1 hour to see if this market structure shift is happening, right? As of now, right, where we are, it's not yet, right? It's not happening at the moment, right? So if you take a look at it on the 4 hours, right, this is what we have. So this is the next demand zone. Right, so I think price could consolidate within this zone, right, the 106.20 to 107.50 region. If price fails below this 106.20 demand, this area here, right, if it closes below this 106.20 demand zone, right, we could see potential for a steeper push to the downside, and the next area would be this region, right? You can see that this was an area, again, a previous support turn resistance level. Resistance turn support level, sorry, right? It was a previous resistance, failed it, retested again as a support, right, and pushed higher. So this is at about the 104 region, right, or 104.20 area. Okay, so this is the next demand for me, right? So this area over here, right, again, if we do see a break to the upside and if price breaks above the 107.50 area, we could see potential for a bigger bounce, right, towards the next resistance, which is this area here, the 108.50 level. It was also the level that price first did a break to the downside. If you take a look at this movement, you can see that price did a bounce, right? Tested this region multiple times before it failed or moved to the downside. So if price breaks above the 107.50 level, the next resistance for me is at 108.50. Right, so this is on dollar index. Right, so consolidation around this zone, right, and this also align with what we see on gold, right? Because if you take a look at dollar index, right, gold itself is dollar denominated. So when dollar strengthen, right, you can see that gold would tend to move lower. In this case, right, when we're seeing that rebound in dollar on the daily time frame, the slight rebound, right, I would say that it's not as much. You can see that this is also accompanied with that, oops, sorry, let's go. Right, so this is also accompanied with the push to the downside. Of course, there are also fundamental factors driving this, right? For example, market sentiment, right? So gold itself is a safe haven. So when you have easing geopolitical tensions, or if you have anticipation that central banks are going to keep interest rates higher for a longer period of time, right? That could also weigh on gold. It's a few fundamental factors at play as well, right? And also central bank purchases, right? That also impact gold. Right? But just from a technical perspective, right? These are the key levels. It's still currently holding above the 2880 demand, right? So unless price breaks below this, then we could see potential for a steeper decline below 2,820, right? If it continues to hover around that, right, we could see that consolidation within this range, 2880 to 2920 level. Okay, so that's it for today's analysis. Thank you for joining me. I'm Li Xing Gan, Financial Market Strategist Consultant to Exness.